Hi, and welcome back to the Bullish Bears YouTube channel. I'm Jeremy, and I've been running this series called Advanced Charting Techniques. Very briefly, I put out like 3 videos over the weekend here, and I'm trying to piece together some other videos throughout the week, but sometimes my schedule's pretty busy, so bear with me. Anyway, getting right into today's lesson, we're going to look at kind of a thing that I've made look really easy. When I get out there on the watch list show, I'm always drawing boxes, and what they do is a little different than the traditional thing that boxes would do. It's also different than the traditional measured move. So let's get into a couple of things here. So typically a measured move would measure a low and a high, and then it would estimate a percentage or a fib level for the secondary part of that move to trade higher or lower in a bearish case. But we're going to look at the bullish case first. So the idea is to start with a naked chart, and you don't necessarily need any moving averages or anything. You just need the candles themselves. So let's get that going. And then we're going to look at Kava, for instance, here, just a random chart that I noticed was looking a little bit bullish in the short term. So let's get a couple things out of the way first. So when you're looking at a primary move like this after a reversal, which we do see here, some would call this an inverse head and shoulders, some would call it a double bottom or triple bottom, whatever you want to call it, doesn't matter. You just need to be able to dance when the song comes on. So let's go with a couple of things that are obvious. We have a trend here, and we have a consolidation. We're on a daily chart. Let's break into a 2-hour chart and see what this looks like on the inside. Well, we've got quite a prominent move here, actually. And ideally, we want to find a price target should this consolidation range break to the north. So we need to measure what the previous trend is telling us is likely to be the secondary outpulse and or outward target. And traditionally, you would measure this and figure out what fib percentage, what Elliott wave, whatever you wanted to do to figure out how this measured move would play out in the long run as a short-term target. There's an easier way. If you have a primary trend established and you have kind of a broad consolidation range, just split the difference. So all you really need to do is take a box from the low, and I'm going to ignore wicks. I always ignore wicks. To the high, okay, and then split the difference. So take it down to eyeballing it, literally, just wing it. You don't have to be dead on with these. Find the mean of that consolidation with the edge of your box. So you're just getting the meat and potatoes of this big move. When you're swing trading, what your ideal take is in profit is the meat and potatoes. You already go into this knowing you're going to leave a little money on the table, and that's okay. That's what's great about this style of analysis is that you don't have to be exact. You just have to be close enough to make yourself happy. And anytime you're making money, you're going to be happy. So take a second box and draw it over the top of the first box and literally just stack the boxes. So let's get some space here. Grab that box, drag it up here. It can go right on the mean as well, right on the mean between high and low of this range. It's pretty obvious. You see a candle stop here. It's probably in the mean. There's one here. All about the same. Now you have bullish targets. So if this range of accumulation here breaks bullish, it's got 2 likely targets. Apply this, probably write it on a post-it note is what I always say to our members in the group. Half and whole, and pay attention to that statement because that is going to be your rule for finding these targets and sticking to a good trade plan. If this, then that. So find about half that box, strike a line. In this case, it's about 128.25. And then find the whole box, about 134.25. That's all you need to know. If you get blinded by bright colors on your chart, fade them to gray. It keeps it off of your headache-causing glaring brightness, and gives you a chance to see the price or see the candles or see the forest through the trees, so to speak. So let's look at this breakout target. First breakout target, half a measured move, and this is just based loosely on a box. It doesn't have to be precise. It doesn't have to be a specific percentage or a specific fib level of anything. It's just a measured move. Half of that is 128.26. The whole move is 134.26. Now let's do something a little more interesting. Look back. You'll find there's going to be a range bar or some liquidity zone or something that tells you that it's likely to return to that. In this case, it's a reversion target. It's about halfway back from this previous bearish measured move. So if this structure breaks bullish, where's your resistance level? Well, that's where drawing lines really helps with this a little bit. And you don't have to draw lines. You can just eyeball the chart. You just need to see the candles. You don't need to see all the details. Ideally, an angular, if this were a flag, would be broken right about here. So if you see confirmation and a trend start to form above this guy, you're more than likely going to reach up to that target. And here's where the exception to the half and whole rule gets put on the paper as well. Write the words, and sometimes quarters, and sometimes thirds. Look left. This wick is about the 1/3 level. The previous wicks here, about a 1/4 level. So make that into a pivot area or area of interest. Or if you really want to, draw another box. And this gives you what I like to call liquidity zones. So when you see these wicks sticking up, find the one that's most important. You can see all the candles kind of line up here. You can see that there were some sellers that took it up here with limit orders. Some sellers took it here. They're all over the place. But in general, they all kind of line up at about this wick here. So I like to draw that as an area of liquidity. And I know that even if price breaks out of this range here on this little angular resistance level, there's some liquidity here. There will be some sellers here who are going to take early advantage of a bullish move to take profit. Some of these people might have been holding from down here. You don't know. Others might be bag holders from previous chasing. They thought this was going to be a breakout. They chased it here and they got smoked. They're still holding that bag. Ideally, all you need to care about is that's an area of interest. And if you look here, that wick kind of lines up anyway, right? So you get what I'm saying. That's a liquidity zone. It's important to add to a measured move chart format where you're looking for the secondary move after accumulation so you can catch a bull move. If you miss this part of the story is much easier to get later. So you can be patient and wait. You don't get to be this guy chasing it, holding the bag. You get to be the guy who's patiently waiting for your opportunity to get in when the signal is right. And this is all the combination you need to find those edges in the market to give you a little bit of a boost in your swing trading ability to find price targets. So pretty much wrapping with that. We can see if price melts through this and melts through this liquidity zone, gets outside of these previous wicks. Very good probability of following through to a half measured move. And if it continues to blast through there, we get a whole measured move. Pretty simple. Keeping your charting simple is as advanced as you can get. Go study all the complex stuff. Read all the articles about all the Elliott wave theory and all of the different things you can do with fib levels. Get to know that stuff, certainly. It's good to know that stuff because it makes it much easier for you to simplify things later on when you understand all the inner workings of what everybody else is looking at. You just need the easy button trades. This is how you get them. Make your chart easy. So this is advanced, made easy. Thanks again for joining me, and we'll see you in the next video.